Good evening, ladies and gentlemen. Welcome to this call. It is Monday evening. It's time for Crypto Talk. And what an amazing week that we have. And the news for the week is just coming in fast and furious. Different portions of news coming in, flooding in. And just before we gone live, I've seen this coming in. Breaking, the UK government has announced plans to adopt stablecoins as legal tender. Now, I promise you, if this was a week ago, I would have thought this is some April Fool's joke, but it is published today, 6/31, on April 4th. So I assume that is not an April Fool's joke. And then there's another one, and I promise you it will enter in there just in. And that's published just now, 7/17. Russian largest bank, Sberbank, I don't think South Africans should say that name, has launched its own native cryptocurrency, that coin, which sounds like sperm coin. But that be as it may, it's an amazing time to be in crypto. It's an amazing time to be active in crypto. And before we go to Jason, I would like to share a little video with you from a certified financial planner with regards to different assets that he's been tracking for the last 2 years. And I will share the link to his page. I will share the link in the chat box just now. I will also share the link on our Facebook page, and I will share the link on the Morning Call group as well, if you be interested to go watch his video and allow us to make this certified financial planners video go boss. And let's just quickly listen to what he says.
Hi, you're back with me, Gerrit from Ultima Financial Planners, and this is the 8th feedback session on the 6 investments that we started tracking on the 1st of April 2020. So it's a comparison between 6 investments, and the investments that we included was the Allan Gray Equity Fund, which represented South African equities, then the Allan Gray Money Market, which represents the money market fund, Portfolio Metrics Offshore, which is pure offshore equity. Also, we included gold, and we looked at Kruger Rands. Then we also included Bitcoin, and also property, which was presented through the Prudential Property Enhanced Tracker Fund. So these are the 6 investments that we started tracking, and we did it because many investors through the past 6 years before that time actually thought that an investment in fixed interest, specifically the money market, will consistently outperform all other investment classes. Now we know that the money market will outperform in certain circumstances, and we'll also look at that a little bit later on. But is it true that the money market will always outperform? So we started tracking these investments. And if we then look at the 6 investments, we actually see now the 1st of the 4th, 2020, where our 6,000 Rand increased to basically 12,866. But also we can see that the 1st of the 4th, 2021, we achieved the highest value of 15,000 Rand, and that was because of Bitcoin. So if we then just look at the inclusion of these investments, so we strip out Bitcoin and we look and we see that the South African equities represented by Allan Gray performed the best. Our 1,000 Rand actually increased to 1,800. We also see that the property fund, which I thought wasn't going to do that well, that increased to about 1,500 Rand. And then the offshore fund, represented by Portfolio Metrics, actually had a steep decline the last quarter. And then we see the money market, Allan Gray Money Market, steady as always. And we see the Kruger Rands over this period actually underperformed and performed even worse than the money market fund. Now we know that Kruger Rands should actually perform much better now with the crisis in the Ukraine, but we see that the Kruger Rands are lagging. So if we then include Bitcoin, we can see that, Bitcoin actually skews this whole investment comparison, because we saw that Bitcoin actually went up the 1,000 Rand up to 9,000 Rand by itself. And then we had a steep decline, and in between, from basically the 1st of August 2021, we saw a slow rise in Bitcoin again. So at this point in time, Bitcoin is still by far ahead of all of the other investments, and that has pulled our investments up so that we basically, after 2 years, still are doubling our money, our 6,000 Rand that we invested. And people thought that Bitcoin would actually go lower. I don't know, as I always say, what Bitcoin is going to do. But if we then just look at what happened with all of our investments, and there we can see the Allen Gray was just a steady rise since the first quarter. Also, the money market, obviously, that pays a fixed interest at the moment, about 4.5%. We can also see that the offshore funds did quite well, but there in this last quarter, we see that there's a sharp decline. Then we see Kruger Rands, as we expected, and Bitcoin, which shot up and then came down again. So we had this outlier that took Bitcoin up to almost 9,000 Rand, our 1,000 Rand. And then Prudential Property actually also performed quite well, that we see. So at this point in time, we're not doing too badly, even though we are in a crisis in terms of what's happening in the Ukraine. Might be a War 3 coming up. If Russia defaults on their debt, our Rand will be influenced quite a lot. But at this point, we're chugging along nicely. So in closing.
So yes, ladies and gentlemen, thank you, Gerrit Viljoen, Certified Financial Planner. He's given me permission to use the link to his video and to use his video. And I'll urge you to go watch the full video, because he now adds a little bit about inflation in the end, which we don't have time for now. But I think that's interesting to see. And remember, we are not allowed to ever compare different assets, hence the fact that we're not certified financial planners. But that's why I received the blessing from a certified financial planner to just show you what's happening in the market, and to show you how the different asset classes performed in the last 2 years. And you've seen the sharp decline in Bitcoin in that same time. But without further ado, allow me to just take you back to the topic for tonight, the Bitcoin to altcoin flip. Are you ready? And we know that most of us are ready, but we don't have to be ready on our own, because we have the subject matter expert on crypto trading, Jason Ashington, in the room with us tonight. And Jason, let's introduce you and look at the markets directly from you, and then we will continue and introduce our other two guests as well. If I just get control of my mouse, I will continue on my side. So Jason, welcome to this call tonight, and please give us your every Monday brilliant overview of the market.
Thank you, Donnie. Good evening, everybody. Yeah, so we've seen quite a nice move in Bitcoin. That was prior to last week. Last week, this time we were around about up at 47,500. Just remember that the market doesn't go up in one straight line. There are retraces along the route, and we are starting to see a bit of a retrace at the moment. So it's pretty much elastic band. Once elastic band starts stretching to the downside, it gathers more buyers at the bottom, more buyers come in, and it pushes the price up even more. Once that elastic band is released, it pushes price higher. So we mustn't view these pullbacks as being negative. They're actually positive for the market. And let me just go through and show you what I see that's actually going to take place. So before we get there, I always go through the Wall Street cheat sheet, and this just really talks about the emotion in the market, because the market's all about emotion. When we've got these emotions of anxiety, denial, panic, that is when the red candles are coming through, like we are experiencing right now. And when everybody's climbing into the market and pushing, now this emotional cycle plays off on larger time frames and also smaller time frames. So right now, as I say, we're going through a bit of a drop in the market now, and you'll see that once we start the next leg up, this whole cycle will repeat itself and then go down again. But if we look at this on a larger scale, and if we take the euphoria of November last year, when Bitcoin was at 68,000, We dropped into the beginning of December. We had the New Year's rally up to complacency. And then for 3 months, we dropped all the way down right into anger. And about 2 weeks ago, we were down the bottom by frustration and depression. And we've seen a nice move up prior to last week, especially in some of those alts. And we have started to move up. The emotions are starting to change now. There is still a bit of doubt in this market. We're starting to, as I say, we're starting to see a pullback now. So we could be in this belief area where people are saying prior to 2 weeks ago, we were experiencing the same thing when the market will go up and then pull back. And it's really doing the same thing right now. But I believe that we've turned a circle and we are starting to trend up now, because what happens after disbelief, we start moving to hope, optimism, belief, thrill, and euphoria. So we repeat this whole cycle all over again. Just remember right now that the retail haven't started coming into the market yet. So if we look at the fear and greed index, we're sitting today at 52, which represents neutral. And if we look last week, we were at 60. So we're a bit higher. The market has started to trend back down in the last couple of days. So we've gone to 52. I think tomorrow we'll be down by 40. But the retail, they start pushing the market higher and start pushing the meme coins like the Doge and the Shiba Inus. We only start seeing them once the style gets to the green. And by that time, it's too late, because we'll be in the greed and extreme greed area. That is where you start selling, not where you start buying. And if we just have a look at history, and you can see how the cycle is repeated, we got these situations where we go down to extreme fear. This is where the institutions in Wales are buying up. They push the market back up. The retail start joining the party up the top here. And the institutions by that time start selling off to them. And then they drop the market again. And they repeat the whole process over and over again. So right now we're halfway up. And we still don't see the retail in the market yet. So only once we start getting over the 200 moving average will we start seeing some of those retail come in. If we have a look at the Bitcoin chart, last week, this time was the 28th, and we were around about over here, 47.5, 48,000. And you can see we have dropped off. On Thursday, we had a bit of a drop down. It got pushed back up on Friday, went sideways, and now we're starting to drop off again. But before we get there, let's have a zoom out here and go into the weekly. And this weekly chart is going all the way back to December 2020. We pushed up into when we had all the Teslas and Grayscale buying Bitcoin at a stage, pushed the price all the way up. We went sideways for 3 months where the institutions sold off, pushed down again in the beginning of May into July, where the institutions accumulated at 30,000, pushed back to 60, doubled their money, sold off, repeated the process over and over again. So they buy at 30, sell at 60. Drop the market, buy at 30 and sell at 60. They just repeat that process over and over again. So right now we're forming this channel, this white channel. We've connected the tops and connected the bottoms, and we're trending in this channel to now to the upside again. If we go down to smaller time frames, before we get there, we've got this yellow line that has played as support from July last year. It touched again in September. It broke through in January and has touched here twice as resistance. And once again, there's been resistance in the last 2 weeks. We go on to smaller time frames. Now on the daily, we started pushing up here in the middle of March from 37,500, and we went right up to 48,290. And look how it touched that yellow line that I'm speaking to right now. But more importantly, if we go and have a look at the 200 moving average. So the 200 moving average, what it does, it takes the closing price for Bitcoin for the last 200 days and averages it out. And you can see that we've also touched the 200 moving average. Now, why is the 200 moving average very important? What the big investors say and the big traders say, once we get over the 200, that is clearly a bullish sign, and it leads in most cases to more upside. Sorry, I need to go back to the daily here. Let me show you previously where we broke through that 200 to the upside. So there was a case here in October last year. We broke the 200. Look at how that bullish moved up after that. You can see prior to that, we broke through in April 2020, tracked sideways, and then suddenly pushed up in April 2020. And we got some more cases here where once we get past that 200, that's when the traders, that's when the investors start coming up into the market, and that's where retail start coming into the market. So we want to get above that 200 very quickly. Now, what has happened in the last week, we've gone into this orange bullish pennant, and it looks like that we're honoring that bullish pennant at the moment. We do have support. If we have a look here at these areas here, we do have support. We just take a rectangle. We have support in this sort of area here. Let me just bring it down a bit. So if I just draw that across, you can see that green box there, rectangular box. It is a support area. So there's a good chance that we come down to 44,600. There is a possibility of us even spiking if it might spike down, capitulation. And you can see some other support areas around here at 42.5, 42,600 is another support there. There's a chance that it comes and spikes down here. There's another support area around here at a bit higher than that, 43,200 or so. But I don't think it's going to be a big retrace. You must remember that there's a lot of traders that haven't joined the party yet since we started going up in the end of March. They are looking for entries. So every time price drops here, there will be buyers coming into the market to buy up here. So we want to see us honoring this pennant and then hopefully move off there to the upside. So before we get there, I'm going to come back to this chart now. I just want to move over to the Bitcoin dominance chart quickly. So what we've got here is if we go onto a higher time frame, onto the 8-hour, maybe go onto the 12-hour, we've been in this white channel since the 22nd of January. You can see it honored the channel as the Bitcoin dominance carried on up. So Bitcoin became more and more dominant as time went on. And then we had a break to the downside on the 18th of March. And that coincided with when Bitcoin started taking off. And what happened here was that the money started flowing out of Bitcoin into the altcoin. So when it started trending down, the Bitcoin became less dominant and the altcoin started performing well. But we've got to an area now where we really are way oversold. And if you look at that RSI on the 12-hour, on the daily, it's right at the bottom here. So it's really oversold and it's starting to trend up. So we've oversold on the alts, and the expectation is obviously to have some sort of retracement. Remember, we don't go down in a straight line. So we could be moving back up here to possibly on the daily 200. If we open the 200 here, the 200 moving average on the daily sitting at about 42.3%. So there's a chance that we move up here, retest up there before moving down. So that would look something like that, up there, retest, and then hopefully start moving down from there. Just remember that the Bitcoin becomes more dominant in two ways. When the market is dropping, altcoins drop quicker than Bitcoin. Therefore, the Bitcoin dominance increases. When we see some bullish moves on Bitcoin, that normally means that Bitcoin is now in some areas outperforming alts. And when you see some rapid bullish moves in Bitcoin, it seems to move up. Yeah, so we expect us to move up here, and we expect another 2 or 3 days of red in the market, then hopefully a turnaround from there. The other chart that I want to show you was if we look at the total market cap on the daily, this, and once again show the 200 moving average. And guess what? We were bouncing against the 200 moving average, also on the total market cap at $2.1 trillion. If we go to the total 2, which now excludes Bitcoin, so it takes Bitcoin out, same story, it here against a 200 moving average. And on total 3, which excludes Bitcoin and Ethereum, same story. How fascinating is that? If we go back to the Bitcoin dominance, what I want to show you here is that if we switch off the 200 and we switch on the 21 or even the 20, it's pretty much the same. And if we have a look and see what's happened here, the 21 and the 50 have crossed to the downside. Now, if we go and look in the past year at cases at when this previously happened, and we can see that in August last year, the green crossed the red. What happened? Massive downside where the alts took off. It happened again in the 10th of November, where Bitcoin started dropping. Some of the money flowed into the alts for the following 2 weeks, and we had some nice bullish moves in some of the alts. And you can see once again it's crossed again. So hopefully we're going to see this dominance start trending down, next week and the week after, start trending down, and let's go and retest these lower levels and see these altcoins take off. If we have a look at Ethereum, and just go into the daily chart there. So Ethereum this morning tried to break above the 200 moving average at 34.87. Unfortunately, we're sitting with also a massive resistance area of $3,500. It's got rejected there and starting to trend down. There's a possibility we come down and test here 3250, or even this yellow line here, which is the daily trend line that comes all the way back from December 2020. So it's a yellow trend line here that's been in place for a hell of a long time. You can see we've been honoring and breaking through, coming back up, and now we're above it. And there's a good chance that we come down and retest this again at 3160, 3250. What is fascinating around Bitcoin is that, around Ethereum, is that Ethereum is starting to show a lot more upside than Bitcoin. If we have a look at the Ethereum Bitcoin chart now on the daily, so from the 7th of December, Bitcoin outperformed Ethereum. You can see how this chart dropped. And then from the 15th of March, the middle of March, it turned around. Same as what the dominance did. The dominance started breaking to the downside. So Ethereum's performance started outperforming Bitcoin. And you can see that it's gone up very quickly. And we're now above 7,500 cents. And that is looking like it's holding support there at the moment, which is very, very good. If we go back and look at a bit of history to see what, let me go into another Coinbase. We go and look at a bit of history here and see what happens when we start getting some of these alt seasons and we see some massive moves up where the ratio goes up to 0.1 of a Bitcoin. So the Ethereum goes to 0.1 of a Bitcoin. And we can remember in those people that are around in the end of 2017, 18, where Bitcoin went up to $1,400 and we started spiking up here right up at 0.17% of Bitcoin at that stage. But it has dropped, you can see, it has dropped quite considerably. And I think a fair estimate now where this could go to would be around the 0.1 area. So if Bitcoin goes to 55,000 by the end of this month, and we take 55 times 0.1, that could give us Ethereum at $5,000. And I'm using crystal ball here. Okay. So even though we've seen Bitcoin trending sideways over this last week, if we go look at crypto bubbles on the top 100, we see some nice green bubbles here. GMT 100% up. Glamour 55, Aave 32. These bubbles are actually bigger this morning before we started dropping off this afternoon. Audio 35, where they announced that they're going to go into the metaverse. So if we go and look at This was on the 26th of March. We saw a move in ZIL where it went from 4.5 cents right up to 23 cents in the space of 3, 4, 5, 6, 7 days, a week. 4.5 cents up to 23 cents. And we've seen some other moves there on Digibyte, and there's another coin, I forget what it was, also a massive move. Yeah, it was VET. So yeah, there's still some nice green bubbles here. And as I say, this morning there was a lot more green bubbles before the drop off this afternoon. Now, I just want to show you one tweet here. This is by a guy called Lark Davis from New Zealand, and he's quite a big trader. And it's quite interesting what we're reading here. He says that just over 96,000 Bitcoin a month are leaving exchanges and going to cold wallets. At that, there'll be no Bitcoin left on exchanges by the end of 2023. Now, the institutions and the whales are buying up at a rapid rate. And when there's less Bitcoin on exchanges, that is now going to push price up quite considerably. And I think that in the next couple of weeks, we're going to be testing the all-time high again, around about 68,000, and even possibly going through that. So if we have a look here quickly and see what could happen, remember that in the bullish move, in a cycle, we normally go up in 5 or 7 waves. So we'll go up wave 1, down wave 2, up wave 3, down wave 4, up wave 5. And there could be a wave 6 and a wave 7 that goes up like that. So right now, if we just have a look at what we have done in the last 2 weeks, we've only started leg 1. So we've done leg 1 up to last week Monday. We're now coming down for leg 2. Leg 3 is normally quite a biggish move, and I think we're definitely going to go up and test the 618 retracement at 55,000. And what I mean by retracement is you take the high of November last year and the low of the end of January this year, and you work out the Fibonacci level, the emotional level to the upside, and that's sitting at 55. Also at 55 is a lot of previous support, which is now resistance. And we've also got this massive candle that we dropped off here in the 3rd of December, where there's liquidity that has to be captured. So I think wave 3 will definitely move up to this level here. And then a retrace there. I think we'll have quite a big retrace down, possibly down, even down to 44, 20%. And then a biggish move off that, possibly up to 61. That's for the 5th leg. And I think that we're going to have an extension here, maybe even another 6th, 7th leg down, possible to back down to 55 again, and then a bullish move back up. If we have a look at the 1.61 extension based off so if we take the high in November and the low here at the end of January and put an extension to the upside there, 1618 is sitting at 91,000. So there's a possibility that we could even go up to 91,000 and test this level here in the last leg. Remember, this is all crystal ball stuff. We don't know what it's going to do. Based on the amount of Bitcoin that's leaving exchanges and the scarcity of Bitcoin now, I think we're going to have a big move in Bitcoin in the next couple of months. So that is all from our side, Donnie.
Cool. Thank you, Jason. And very well done with the way that you just have the way to make the charts easy for people like me. So thank you, Jason. And we really appreciate what you bring to the party for us. And we will get back to you, Jason. I know you're not done. I know you still have some to share with us, but allow me to just introduce the young gun, Andre Smith. He's doing crypto trading now just over a year, and he's learned a lot. And he's our young gun on the team that we all grandpas here. but we have Andre here to just balance it out. And for the younger crowd to know that we're not just about old toppies. We want the younger crowd and help and assist the younger guys as well. So Andre, thank you very much for assisting us. And Andre said that tonight he will talk about the Fibonacci tool. And I asked Andre to make it as simple as possible, not to confuse everyone. But after tonight, everyone should say we will be able to use the Fibonacci tool. And Jason showed the Bitcoin Fibonacci that the 618 is at 55,000. And I would have wanted to show that because I can draw that one. That's an easy one. So, but Jason has now told you that already. So now I cannot say that. Andre, please help us so that I can truly understand this Fibonacci story.
Yeah, guys. So yeah, I'm excited. I really do hope I can share this so that you guys can understand and don't have even more questions. So before I share with you guys, I just want you guys to know that I wouldn't use the Fib retracement on its own, the Fib tool on its own, to enter the market or to exit the market. It's just for the localization. So it's just so that I know, okay, this is a good zone where I can enter, but I wouldn't use that exact 618 levels or whatever, just that alone to enter the market, so that you guys just know, yeah, that's that. And obviously it doesn't matter what strategy you have, it's not always going to be correct. Yeah, so I use this with my RSI and all of that stuff, but I won't confuse you guys tonight. So yeah, let me just move my screens here together so that I can share my screen. Okay, great. Let's share this. So first of all, I'm just gonna share you guys how I get to my Fib tool. So you can see at the top here, at the top left, and maybe I should just make everything a bit bigger. Okay, now you guys can see. Okay, so there at the top left, you can see there, there's like a lot of lines there. You can open this. What I usually do is I just go there and store this, so you can see Fib, but you get a trend-based Fib extension as well. But we're just going to talk about the Fib retracement. So store that, and once you've stored that, you would see it here. So I'm just going to draw it here to the left, and now when I click on, I'm just going to draw this in. So that's what you would see with the default settings. So what we're going to focus on is we're only going to use the from 0 to 1. So I'm not going to use the 2.618, 4.236. We can use that for take profit points, but I'm not going to talk about that just now. I'm not going to use the 236 as well. So you have to have the 0, 0.382, 0.618, 0.5, and 0.786. So you can take a screenshot here, and then there's a lot of stuff that you can actually change. So what I usually do is I like the labels to be at the right and at the top. So it's just gonna show the price or the percentages at the right and the top. And if you use logarithmic, then you just have to add that. You can just tick that, but we're not using logarithmic scale. So that's that. So again, 0.382, 0.618, 0.5, 0.786. So yeah, now it should look something like this. And just for the sake of this video, I'm going to make this lines bigger so that you guys can see it clearly. So that's like really big. Okay, maybe too big. Okay, yeah, so something like that. And you can save this. So you can just click on that down arrow and save as crypto school. Wait, I had another one. Huh? So I'm just going to save over that one. Okay, great. So every time
As
you
said, crypto school, we lost you. Okay, now you're back. I was just afraid that we lost you.
Oh, okay. Okay, sorry guys. Anyway, so I just saved this as crypto school as a template. You can always come back and use any one you want. So I just saved the crypto school. So yours should look exactly like this. And if you're a bit lost, you will be able to see this later on the Facebook and on YouTube. So yeah, first of all, this is what you should see. So it might sound confusing. So basically what this is, that 382 level is actually just a percentage. From that point at the top, if you use your percentage tool, to that point, it's actually the 382 percentage. So it's actually 38% from that level. Or maybe it's inversed, I'm not sure. But anyways, so that's basically what it is, just the percentages. And yeah, so yeah, let's go quickly. So first of all, when you want to use this FIB tool, because you're like, where should I start? Where should I begin? You should actually go and check the market. And this is on 15 minutes. You can use this on any time frame. So you should come here and check and see where is the swing low. So obviously this level here, and I can draw this. So this level is a swing low. And that is what you call a swing high. So let's just delete that. So I'm going to take this tool and I'm going to open it a bit bigger. So that you guys can see. So what you do basically is you just put this at the bottom. And if you want to say that the market, like we are only here at this stage, you can see here that if you go and Google it, there is three lines that they always say that is like the most important lines. And that's the 382, the 50 and the 618. That is the levels that they say is the most important. But I really like the 618 and 786 zone as well. But yeah, if you Google it, you'll see that's the level. So you can use this, and as the market goes on and on, because it didn't change any direction until this point. You can see the market didn't change any direction. It didn't retrace until that area. Then you saw, okay, boom, the market retraced. And to what level? The 382. So that's actually quite interesting. And now, and this is going to... I hope I don't confuse you guys. Oh wait, no, let me not do that. It's gonna confuse you guys. First of all, you ask, I know when I started, I asked, how do I know from which point do I start to draw it? From the bottom or from the top? So if you want to see where the market retraces, so obviously when it retraces, it's coming back. So you start at the bottom and then you're going to the top. So an easy way to see if this thing is correct. So obviously this is the 618 level. So if you see that the 618 level is, for instance, let me just draw this the other way around. So if you see that the 618 level is there, you can see that shouldn't be the 60% level. So from that point till that point, that is the 50% level. So you can see, okay, obviously that's not the 60% level. It must be lower. So then, okay, you're actually incorrect. And Undani, just tell me if you understand what I just said. Do you understand?
I understand you.
Okay, guys. So great.
It's just important, Andre, because people ask, but when do I draw it upside down and when do I draw it from the bottom up? And that's why I asked you to explain that.
Yeah, I'll get to that now. I don't want you guys to be confused. So first of all, just know this is percentages. So from this point to that point, you actually want to see where is the percentages? Is it 30%, 60%, 50%, whatever? So you can see it's incorrect. And you can actually come in the settings, you can scroll down and you'll see there's a reverse sticker. So once you click there, you can see it just flipped it upside down. So now you can see, okay, that is actually 60%. So let me just check. You can see there, 60%. So now, okay, this is actually correct. So this is if you want to see the market retrace once it's going up and you want to see it retrace coming down. So that is perfect. And like I said, guys, you don't use this just on its own. You use other indicators with this. And this is just for, I hope, for educational purposes. So when do you use a different way around? And before I go that side, let me just go to Bitcoin. And this is, and you can see here, this is the original chart as well. Let me just open our crypto school one. So you can see here, this is Bitcoin and this is actually March 2020. And yeah, we can come here and play with this. So you use the bottom, like I said, you should get your swing low. So obviously this was going down. You saw here, this is the swing low. So I can actually show you guys, you can use this because there's a thing, you can long the market or short the market. If you long the market, you're actually saying, okay, you're buying Bitcoin so that the market should go up. If you short the market, you're actually saying, okay, Bitcoin should go down. And that's when you use leverage, but I wouldn't advise it to you guys now, but you can use it to take profit. So you can see this is the top. And there's two ways for you to use this. So either you can invert your chart, and on Mac it's Alt and I, so you can flip the chart, but I'm not going to do that. I'm going to show you guys how to use the fib tool correctly. So you take the fib, and now you want to see where the market is going to retrace to the upward side. So you take it from the bottom. Earlier you took it from the top, sorry. So earlier you took it from the bottom. We're now going to take it from the top. So I'm going to place this there, because you see this is the swing high, and put it there at the bottom. You can see here, boom, 382, 618, 786, that zone. And that's why I like that zone. That's the golden zone they talk about. And now you can either do this, you can actually, when it goes on, you can actually draw a new one from there, and you can see it went to the 382, or you can just leave it there and just go on and play with this. So you can actually draw this and play with this, and there you can see that 382 line is like really significant. It's just using that line. You can see there, didn't touch it until this area here. There's the 50. So like I said earlier, if you go Google, the significant lines for fib is the 382, the 50, and the 618. So that is where the market usually retraces. They retraced at the 50, and it shouldn't, it doesn't mean it should retrace exactly at the 50 or exactly at the 382. You can give it a small, so you can see the market respected all of that levels actually. And you can say that it respected that area, but it didn't. But obviously this is now the end of this, what do you call this, low downward trend. And from here on, it actually went up. And that's where you actually get something called take profit. And you can either use, so I told you guys, I'm not going to show you the trend-based fib extension. So this is actually quite confusing at start. So you can use this, but it's a bit difficult. And I'm going to show you guys now. So if you use the fib tool, and just tell me if there's something I'm actually not saying correctly or whatever. So you can use this tool. I'm just going to draw this. So this is for retracement to the downside. So I actually want it from the upside. So I should draw it from the upside to the bottom there. And now you can go back. I'm just going to say apply default drawing. So that's the first one at the beginning. So you can see the 1618, look there. It retraced at that area. So it's quite significant. And that's what I said, guys. It retraced there, but it actually went up furthermore. So this doesn't mean it should turn around there. It's just a guideline for where the market can retrace. And look how significant this levels is. So there's a lot of different fib levels that you can actually add in here, but I don't know all of them from the top of my head. So that is in short how you can use this fib tool. But I like to use this with my trend lines and with my RSI divergences and all of that stuff. And then it actually is really good. And you can see, and it gives you a nice feel of what the market should do, because the market can't go up in the straight line. So it doesn't really matter, like you can't be correct or incorrect. So you can either put the low from there, and look there, 618786. And this works on smaller time frames as well. I think we're just going to lose our space there. But so it works on smaller time frames as well. Doesn't really matter. I know a lot of people like to use this on even 30 minutes and 15 minutes. So you can see there, the 618 level, the 50 level, it really is significant. And you can use this. And this strategy from Rudo, where it takes profits using the 23.6 level and all of that stuff. But I don't want you guys to get confused. So go play with this, go rewind, go back and go use this. And again, I'm going to say it again, don't just use the fib level to trade. Use other indicators with this. This is just a guide for where the localization should be. And I mainly use this, I use it everywhere, but I mainly use this fib level on like bigger time frames to get where I should invest longer scale. And then there's actually different zones, and it's going to get a bit confusing now, but I'm going to share it with you guys. And then you can add that as well. So take a screenshot. So that you can see there I have a low liquidity one there. So for the low liquidity is for mostly a lot of the altcoins usually comes back. So I said you guys the 618 is a good level, the golden level actually. I'm adding it there for you guys. But for the low liquidity coins, like the altcoins and stuff, 786 and 886 is a brilliant zone to invest longer time frame. And I'm quickly going to share with you guys. Sorry, just tell me if I take too much time here, Donnie.
How can I do that?
Okay, so what I do for longer time frames, I wouldn't just kick and ladder in the zones, but what I would like to see is, because this was a 618-706 zone, so now you laddered in there and the market still went down. So I would like to see the coins showing some sign of strength. So it was just making down lower lows. They did make lower higher lows, but they didn't make higher highs. So this is actually really good. It broke this trend, this longer term trend, and it just, you can't even see that actually. It just made a higher, or I'm not going to count that as a higher high, sorry. So I would love to see it break trend. So this is in this localization, and you can draw a box or whatever. So from the 6.8 to 786, but this is the 786-886 zone. So within this box, you see we are currently, but I would like to see it make a high and then a higher low. Then, okay, it's showing really great strength. And I usually check the RSI. Where are we? Are we at the bottom? Are we at the top? And then I would only look to get into this coin. So if it doesn't show me that strengths, then I'm not investing in that coin. And I know FOMO, because you're going to see a lot of coins that just go on, but that's why you have rules for risk management. So in short, that is how I use my FIP tool. And I just want to know if there's any questions, guys, you can ask me. If I don't have the answer, Jason is really smart. He knows everything from crypto. You can ask him even what is your passwords. He would know that. Yeah. Is there any questions, guys?
Cool.
I see there's a question. Do you measure from the tip of the wick or the candle? Some say it's more accurate to use the candle. Yeah, it depends. So for instance, let's quickly go zoom in a bit. So this is on the daily, but obviously, again, I'm just gonna add that line there. So you can see here, we closed there at that level. But if I go to the 4 hour, we closed above that level. So what, like on what time frames are you looking at? So that's why I always use my wicks as well, even with the RSI. There's people that say, no, they don't trade the divergences with the wicks. They only trade it with the candle closings. But for me, that is part of the price movement. That's part of the emotions. That's why I use the wicks with the instead of the candle close. And you'll see there's a lot of times when that wick goes exactly to the 618 level, because the people, they use the FIP extension, the FIP tools and everything like that. Cool.
Thank you, Andre. I assume that everybody is now aware of the FIP tools. Thank you, Andre. If you'll stop share your screen, we appreciate that. And while Andre is busy closing all his candles on his screen, all his charts, allow me to go to the crypto wealth coach, Marius. And Marius is busy doing some day trading, and he wants to share some of what he learned with us as usual. So Marius, please go.
Daniel, thank you. It's just great to have technical guys on the team. I'm not that technical, but I learned a lot. So Andre, Jason, thank you for tonight. I will definitely revisit tonight's information. We are a few guys that's just playing around with the day trading. We are actually long-term traders, but we decided, listen, let's take this strategy of taking $1,000 to $100,000 by compounding it by making 5% per trade. And I personally are using the signals. We've got an indicator here that helps and assists me just by using the buying and sell tags. Just by using this, you can just see on this coin, buy at the buy tag, sell at the sell tag. This is now an hourly candle. You can make a great 37% there. What I also do is that I use the shorter term signals and the day trade signals as well to make some profits. So yeah, Daniel, that is what we are busy with on our side. Lastly, from my side, the crypto school, we've got a coaching program, and tomorrow is an open day in our coaching program where we have all 5 coaches in the room tomorrow at 12 o'clock. So we will share that on the Facebook page of the crypto school. That Zoom link one is welcome there. Awesome. Thanks, Daniel.
Thank you, Marius. Yes, let's go. The webpage for the crypto school is thecryptoschool.co.za, and go to thecryptoschool.co.za, click on the subscribe to access the free stuff button, subscribe there, and you will be able to get access to our free stuff, which is loads of videos to help and assist you to be better at what you do. Then we have our YouTube channel, and please go and subscribe to our YouTube channel. It's YouTube.com/the crypto school. That's our YouTube channel. And thank you to everyone that subscribed already there. And we are sharing the information, and we really try to share every bit of information as possible for you there on a free platform. But Jason, I want you to conclude tonight's meeting and share with us what you still have up your sleeve. I know that you're not done. I know you still have some info that you want to share with us. And before Jason share his screen and share, guys, girls, we not live in lockdown anymore. Can you believe that? We are free again. Lockdown has been cancelled tonight. The president cancelled our state of disaster. I don't know what that holds in. There's always fine print with government, but at least we're not in a state of disaster. For Afrikaans ouens, die grendeltyd is oor. So it's something to celebrate. Jason, over to you.
I see Marius showed us the Telegram there, Salsa Signals. And it's great to have Charles van der Berg on our call tonight from Salsa Signals. Charles from my hometown, Richards Bay. So great to have Charles on the call. Before we get there, let's just have a look here. I just wanted to show you the market cap of total crypto is sitting at 2.07 trillion. Now, if we have a look at one share on the American stock market, like Apple shares, they're sitting over 3 trillion market cap. Now, for the institutions and the big whales to play in such a small market, it takes them time to buy and sell. Now, doesn't it make sense for us to be doing the same as what they're doing, as opposed to be trading against them? And you can see we have marked out the red blocks where they sold between February and May last year, and bought back between May and July last year, and they repeated the process October, November, and it bought back now again. And are trending. What I'm saying here is that once we start moving higher to higher levels up here, we're going to get the same situation where these whales are going to take a couple of weeks to sell off in a small market like this. And they're going to be pushing the price up and down as they sell off. And at this stage over here, we're going to be hearing bullish news around where Bitcoin is going to go suddenly to $200,000 or $300,000, and this whale is buying Bitcoin. And we have to take note and actually take some of that news with a pinch of salt and really actually investigate, is that really happening? So what I'm saying is, yeah, we don't want to get caught like a lot of people got caught in November, where at that stage plan B was forecasting Bitcoin in November to go to 100,000, December 130,000, and then what happened? They sold off. We have to be taking profits at this area this time around. And that's me, Donnie.
I missed it. Sorry, I've tried to find the unmute button and I've missed it twice. So sorry for that. Marius, last words from you for tonight.
Yes, I can just say exactly the same as Jason. Is if the market goes up, take your profits and ladder in. So yes, guys, green candle to you all. Thank you, Daniel.
Thank you, Marius. Thank you, Marius. Andre, last words from you.
Yeah, guys, like Donnie said, I'm just in crypto space for over a year now. And I'm actually thankful that I had the opportunity to see the market just going down and down, and to experience what your emotions are doing. And we always say that, yeah, you're trading against your own emotions. So do whatever you can to keep your emotions from getting to you. And I hope you guys have a blessed evening. Cool.
Cool. Thank you, Andre, for that good advice. And your green screen is looking amazing. I love that chair that you have there to be able to take lots of hours of playing games on that. Thank you, Andre. Appreciate what you contributed. Jason, last goodbye from you.
Yes, guys. I've just read a tweet that's coming through here by some big traders, and they're telling us that they're starting to buy They're expecting a big move in Bitcoin towards the end of the week. No financial advice. So I think this pullback right now is short-lived. If we have a look at what happened in July when we had that move up, there was a small retracement, like Andre says, a 382 retracement. And I think we're going to repeat the same story. We just got a small retrace and we're going to have another move back up again. Yeah, green candles, as Maureen said.
Cool. Thank you, Jason. Thank you, team. It was an amazing evening as usual. Thank you for everyone on the call. It was a privilege serving you tonight from the Crypto School. Have a good one. Green candles in this week. Cheers, guys.